we need some commentary on this, apart from myself. So let's bring in Elizabeth McDonald, Brian Brenberg, Shah Galani, and Scott Martin. You know, it doesn't seem to matter to the markets what Comey's going to say today or the worldwide publicity he's going to get. This market looks like it's poised to keep going up. Shah Galani, first of all, what do you say?
This is a testament to the resilience of the market, to a testament to strong earnings, testament to the fact that initially the upbeat attitude that the market had towards the election of Donald Trump has kind of faded a little bit, but the market has still gone up, so it's held all its gains, it's gotten higher. There's a bid under it, so it's about earnings now. Heaven forbid we get some good news out of Washington, something actually done in terms of infrastructure, in terms of tax. The market's going to go through the roof.
Okay, through the roof. I'll quote you on that. Scott Martin, Comey notwithstanding, seems like the market wants to go up some more. What say you?
It does, Stuart, and I think to Shah's point, the market really wants to see us move on from Russia, move on from Comey. I mean, I think the reality is the testimony so far, the preview that we've seen, is helpful for the agenda. It's helpful for getting some of this stuff done that's been put on hold, because that's really what the market wants to see, is things follow through. And the fact that the market's held on here. We had one really bad day some weeks ago, which feels like forever ago. But other than that, the market's held on, waiting for that progress in D.C.
3, 2, 1, bang. It is 9:30 Eastern time, and this market is open, and this is Jim Comey Day. We've opened with a 4-point loss. That means we are 36, 37 points away from an all-time high, okay? That's very interesting to me. The screens on every TV all over the country, probably all around the world, are going to be locked onto James Comey and the hearing on Capitol Hill that begins in 30 minutes' time. Despite that, the market's close to a record high, and we've opened dead flat. Oh, show me the S&P 500, why don't you? We're virtually no change there. It's pretty much dead flat, slightly higher. How about the NASDAQ Composite? New high yesterday. I believe it closed a new high. I think I'm right there. And it's up again this morning, 14 points up. That's nearly a quarter percentage point higher. How about oil? Tumbled yesterday, 5% drop. No effect on the stock market, by the way, but it's down again this morning. It's at $45 per share. Okay, individual companies, very interesting. NORDSTROM, talking about possibly going private. That would mean a buyout of some sort at a premium to the stock price. That's why it's up 16%. Now, that's helping the other department stores, which have been badly beaten down recently. Kohl's, Macy's, Penny, Dillard's, all of them on the upside, and significantly so first thing. We always follow these stocks, and why not? They keep going up. Facebook is up this morning. Amazon has reached $1,013 a share. Fractional loss for Microsoft. Alphabet, $1,005 at this point. Apple's holding virtually unchanged at $155. Gotta show you Tesla. That thing is still, earlier this morning, hit an all-time intraday high of about 364. It's now at 362. That is a high during the trading time, I believe. Got to get the technicalities right.
There you go. You did.
All right. So we're off and we are running, and we have the market opening with a 5-point gain as of right now. Okay. Let's suppose we come to about 1 o'clock, 2 o'clock. That will be the end of the Comey hearings for this day, I think. It's scheduled to go to about then. Where do you think the market's going to be at the end of the hearing? Brenberg, tell us.
I think if the president is quiet, I think if we get what we got yesterday, the market's going to breathe another sigh of relief, and you're going to see it go up. Look, we've had a lot of drama for months and months and months. Markets aren't spooked by political drama anymore. They just want to see hard evidence. If they don't see any change in hard evidence, I think markets go up.
Lizzie. I think it could be a slippery ride if you have Republicans going after Comey aggressively. And we know that Comey's voluble. He talks. He's dropped bombshells in prior hearings, confirming, for example, the probe into Russia. So if he starts saying, yeah, I felt my job was being threatened when the president said, I demand loyalty. The president said on TV, effectively the Russian thing, that's why I fired him. If it goes down that line of reasoning could be slippery sledding going forward a little bit today, I think, in the markets.
Look, we're covering it, and we're going to watch precisely for that. We'll also be trying to figure out if President Trump is going to tweet directly to the hearing about what Mr. Comey has had to say.
If he tweets bottoms up, you at the Union Pub?
Yes. Ooh, I'm in trouble. I'm in trouble. That's true. All right. Let's move on from the Comey hearings. Let's go to the British election. What we have in Britain is the voting has started already. The Financial Times has a poll of polls which shows Theresa May with an 8-point lead. Looks likely that she will win. Will that have any effect on us at all, Shagalani?
I think if she wins, and she should, based on the polls, that I think it'll give a boost to the markets. It'll certainly, I think it'll give a boost to the FTSE in London. I think it'll give a boost to the European stocks. I think that'll bleed over to us. Absolutely. I think it's going to give us
a little bit.
Yes, it should.
Scott Martin, if Theresa May wins with, say, an 8, but she's going to get 44% of the vote, we understand. I mean, that's the poll sort of forecast. If that happens, do we benefit in America?
We probably do, in the sense that the status quo prevails and therefore there's not any upset to the markets. But I think the next step with regards to Theresa May, Stuart, is what happens in these coming months with respect to what she made comment-wise the other day with changing some of the laws and some of the practices so far, or going forward rather, with some of the terrorism over there and the procedures that are being taken by police, because the markets want to see stability. They don't want to see terrorist attacks. I know there hasn't been a tremendous reaction in equities either here or overseas with respect to these attacks, but regardless, the market wants to see some of the authorities take steps to at least rectify what's going on.
Okay, now we are, 20-odd minutes away from the beginning of the Comey hearing, and we've got a pretty much unchanged market. I guess you could say investors are saying, wait and see. Any bombshells, we'll move on that, but if it goes smoothly, we'll hold at near record levels. That's where we are at this moment. This is interesting. Credit Suisse has named 8 technology companies that the bank says will keep moving higher. You know that the fabulous 5 are among them. So, Scott, let's see what we've got here. Do you agree with this? I mean, here's another prediction. The big-name technology companies just keep on going up. I know we talk about this all the time, but you have to. It's so important for the market. So, Scott, are they going to keep on going up?
They are. Now, I feel like the folks at Credit Suisse, Stuart, have been watching this show because, it's great to get these, it's great to get these recommendations out there, right? To talk about how great the tech stocks are. Now, it would have been nice if they told us that 25% ago, like we did here, back in the fall. So the reality is this. Look, if you look at these areas that they're talking about, some of the names in there, the Facebooks, the Apples, they're companies that are seeing tremendous earnings growth, tremendous profit growth, and they are a tremendous part of everyone's everyday lives. So that's why you should own them, not just because they're pushing up the S&P and NASDAQ, because they're individually great companies that are making amazing developments in technology.
Okay, anything to add, Shah?
They've got to go a lot higher. There's plenty of room. There's nothing above them. There's no ceiling on top of them. If you look at the market since the election, the Dow is up 18% since Donald Trump's election's up a little over 7% year to date. These stocks collectively, on average, the 5 of them are up 31%.
Jeez. You're a brave guy, because you did say on election day, you said the Dow at that time was at 18,000, and you said, here comes 20,000. We hit 20,000, and you said, here comes 21,000. You got it right. And now I've heard you say it, here comes 22,000 and beyond.
If politics fall into line, we can easily get there, and we'll get there quickly, because there's nowhere else to put your money right now. And you look at the leadership here in terms of these tech stocks, they have everything going from them. They have growth, they've got earnings, they're brand names. Some of them have become verbs. I mean, they are the future.
Interesting. Bremberg, now you're an economist. I know you're not a market watcher, so I'm not asking for your comment on stock prices here. I'm asking you to tell our audience and me why it is that these 5 technology companies are so important to America's future.
Because they're doing things that nobody would have predicted 5 years ago. I mean, from an economic standpoint, creative destruction is the engine that drives an economy. And these are the companies better than anybody else in the world that are producing that. So that's why investors are in on this, because they see it. They don't know what the upside is, but they see these companies moving into industries, making money, gaining customers, and that's why you buy.
These stocks are responsible for about 1/3 of the S&P 500's gain, more than that since the start of the year, right?
It's nearly half.
It's nearly half. It's pushing
huge
on that right now.
Never seen anything like that before.
Right.
It's a little scary because of the amount that they contribute in terms of the capitalization and the weighting and all that. But this is not anything like the tech record. There's nothing. These companies are producing massive earnings, massive profits.
Yeah.
This is not about eyeballs. This is about making money.
I'm going to focus on Apple for a second, one member of the Fabulous Five. Yesterday, Barron's senior editor, Jack Howe, he said it may be time to sell Apple shares. He thinks it's about time we sort of dumped a couple of them. All right, Scott Martin, what do you say about Apple and selling now?
Yeah, so, you know, it's funny, Stuart. Of the Fab Five, let's say, Apple is probably the least exciting one to me. And why? Because it's mainly hardware. You know, they talked about the other day, you know, this Apple speaker that's going to take on the Echo or the Alexa from Amazon. But the reality is Apple's been late in a lot of these product cycles. So to me, if there was one of the Fab Five that you would avoid and make it, you know, cut it down to the Fab Four, Apple would be the one. But I still like Apple. We still own it because it's cash flow crazy. They have tons of money on the balance sheet. They just need to get a little bit more innovative.
$225 billion, I believe, in cash.
Just
Here's a gentle, respectful rebuttal to Scott Martin from Wall Street. Apple has a gigantic customer base, possibly bigger than Amazon, around the world. They've sold 1 billion devices. They have 27 million people in iTunes. If they get that speaker going to their customer base, it's additive to the bottom line.
They can milk their customer base. Right.
People like Apple more, but they like what Amazon gives them. And I think at the end of the day, that's what's going to prevail.
And Scott Martin's probably right.
All right, but what are we now? 20 minutes away from the beginnings of the COME hearings, and the Dow Industrial Average is pretty much dead flat, but it's dead flat within 30-odd points of its all-time record high. We're up 2 points as we speak. Let's talk about Alibaba. I call that China's Amazon. It's up very big this morning. I almost said bigly. I almost did it. They give an upbeat forecast. They're talking about a huge gain in revenues. A couple of years down the road, the stock is up 10%. Yahoo is a big winner. Verizon reported plans to cut up to 1,000 employees at Yahoo after merging Yahoo and AOL into the company. That's put Yahoo up 7% this morning. Quick look at oil. We're down to $45 a barrel this morning, and we're falling 20 cents per barrel. That's on top of a 5% drop yesterday. How about the price of gasoline? Right now, it is an average nationally of $2.35 a gallon. I confidently predict that will go down. I think it goes down to about $2.20 a gallon. I think I'm pretty safe with that. Oil at 45 means gas, I think, at $2.20 nationwide. We shall see. All right, when are we going to see these lower gas prices, Brenberg? Economize, Brenberg. Get on with it.
There are way too many factors to say that. I love it. This is great. I mean, how many years, for how long have we talked about running out of oil, running out of resources? Now we're sitting here saying we've got so much oil, prices are going down. This is great. We need this kind of thing for the economy.
You know, when we went on the air, I'm not sure, 2 years ago, we went on the air with our 3-hour show, 9 to noon. It was 2 years ago that we did it. I think oil back then was around $80 or $90 a barrel.
Right.
Now it's cut in half, and the price of gas has gone from way over $3 to just over $2. And I think that's done an enormous amount of good for America's economy.
Cheap, abundant energy.
It's a huge tax cut for America.
Oh, it's huge. What a shot in the arm.
Yes.
I mean, look at me. I'm saving a lot. Scott Martin, go ahead.
Doesn't it seem like Brenberg, though, is the kind of guy that has an electric car? I mean, he's so perfect. He's so environmental. He's pristine. It doesn't seem like he has an electric car after all, so he doesn't care about oil prices.
Ben's fighting words there, Martin. What do you say,
Well, Scott drives a scooter around Chicago, doesn't he? So that's all I've got to say about it.
Yeah, but
I lost my license.
I drive a Chrysler Town & Country van, okay?
How old is that van?
It's 3 years old. I'm about to trade it in. And you know what I'm thinking of buying? You won't believe this. Do you know what I'm thinking of buying? What?
Another van.
No. A Cadillac.
Really?
Yes.
Beautiful.
I'm thinking of buying a Cadillac. I think dollar for dollar.
Like a 75 Cadillac?
No.
20 feet. That's what you should buy.
I'm just thinking, put General Motors stock on the board, please, and see if I can move it. I've got to get to social media. Twitter is now warning you, before you send a tweet, warning you, that was meant to, saying they're just offering a warning. You want to take that back is basically what they're doing. No impact on the stock. The thing is at $17 per share as we speak. But a little bit of a move on the market. Look at this. Now we're up 16 points. I'm not going to call that a huge rally by any means. But, you know, there's 18 minutes to go to the COME hearings, and we're up 16 points on the Dow Jones Industrial Average. One more thing on social media. Snapchat's growth has slowed sharply in the past couple of months. Scott, are they feeling the heat from Instagram? The answer is yes.
Definitely. You know, isn't it funny how quickly companies like Instagram, which, you know, parent is Facebook, took on Snapchat? I mean, it's like as soon as Snapchat IPO'd, everybody kind of went after them, at least publicly. And really, the problem with me and Snapchat is the demographic as to who they cater to, that late teen, early 20s years. Those kids don't spend any money. Therefore, the advertising dollars are not just going to come in over time, as I think everybody expected.
Yeah, well, Snap's down to $18 a share as we speak. Left-hand side of your screen.